This morning, we're joined from Singapore by Todd Elmer. He's the head of G10 Currency Strategy for Asia, ex-Japan, and Citigroup Global Markets. Todd, interesting session so far, I have to say, for currencies, considering we do have the dollar holding up pretty well, I would have to say, considering what we heard from the FOMC. What's going on?
You're right. It's been a wild session. It's been a wild couple of days in currency markets. And when we look at the response to the Fed, it did provide a bit of a boost to risk appetite and did at least initially contribute to some dollar weakening. But I question whether or not that can be sustained. I think in the end, the step that the Fed did take in terms of suggesting that rates would likely remain low for some time was really one of the weakest of their options. And it looks like the bar to that action was relatively high given the dissent. So I think that on balance, it has to be viewed as a disappointment.
Well, okay, but we're not, some are saying we're not at the end of the firepower for the Fed. Do you expect QE3 on the markets? If so, how is that going to affect currencies?
Certainly they did suggest that they were open to, employing additional measures. And I think that if we did see QE3 or if we did see, further alternative measures from the Fed, that it would contribute to dollar weakness. Very consistently, countries that have adopted these measures have seen their currencies weaken, and I don't think that the dollar would be any exception.
Okay, considering we saw the gains on Wall Street, isn't it interesting to me when you look at the currency markets, it looks like it's still risk-off with both Australia and the Kiwi dollar falling today, and again, gains in the dollar index.
Well, both Aussie and Kiwi are up quite a bit off their lows, even if they are a bit weaker on the day. So I think that that reflects a kind of more risk-on environment. But again, the question is whether or not they can sustain gains, and I think that it's going to be tough. And I think as that disappointment and weaker sentiment starts to creep back into the market, the positioning is still predominantly long these risky currencies. So the risk is that investors cut that exposure, and it contributes actually to a bit of dollar appreciation.
Yeah, and we're also seeing some would say, weakness in the Swiss franc as well. I guess given these down arrows across the board right now, Todd, what's the best bet in the currency market, say, within this week?
I think you want to be cautious on risk. So I think that we will see some further outperformance from the Swiss franc, some further outperformance from the Japanese yen, unless policymakers come in with rather forceful intervention.
Okay, best bet in the currency space. I mean, what are the crosses to be looking at right now?
I think you want to be short the risky currencies. So we'd be looking at trades like short Aussie Swiss, short Aussie yen, short Kiwi Swiss, short Kiwi yen.
Okay, Todd, thanks for joining us this morning. Good to see you as always. Todd Elmer, Citigroup Global Markets head of G10 Currency Strategy.